All right, we're taking a look at the latest 25K portfolio. This is the portfolio calculator that I use. It's been challenging trading lately. The last couple of months have been very difficult. Last few months, actually. September was down, and then October was break even, and then we're getting slammed here in November. Just a real extreme lack of volatility in all markets. I've not seen this before in all markets. We've seen this before in one or two markets or sectors, but to see all these markets have such a counter trend nature, volatility crush in nature, all at the same time is very challenging to trade. It's very hard to trade a short volatility portfolio as a retail futures trader. It's difficult. You have to be a market maker almost to crush volatility or short the VIX or do things that we don't typically do. And so we do have some adjustments though, and optimistic about this. Here is the current portfolio. It is in a worst case drawdown. And so we anticipate that our portfolios will eventually hit a worst case drawdown. Don't anticipate it to hit it like this based on short volatility. Or such a volatility crush, but the good news is I want to make this video if you have all portfolios, 25K, 100K, $1 million portfolio, because we start with a basic core set of strategies and then we build out around that for our portfolios. And so regardless of your portfolio you have, we'll start with the 25K and then we'll make a similar video for the 100K and $1 million portfolio. And so this is what we're doing right now, is we're taking a look at the 25K portfolio, which is 10 strategies. And if you don't remember, originally we have 5 core strategies related to the 25K portfolio. And I want to show you what those 5 core strategies look like and the results of those. And to do that, we're going to remove the bonus strategies. We have these bonus strategies that we added, and several of those are in crude oil. So we're getting rid of crude oil weekly inventories. Almost the opposite of this is where crude oil after hours, looking at maybe taking a strategy that would almost do the opposite of that to crush volatility, to short volatility, because crude oil has been extremely difficult to trade. Also, gap fill and reverse crude oil, removing that, and I'm basically removing all the ones with the A in the A column. And gap fill and reverse E-mini S&P, removing that. Tick pulse has done terrible in such a narrow range. This is a trend momentum strategy. There is no trend in momentum. There's no follow through on anything that starts to look like a trend. Once it looks like a trend, the trend is over and it either dies or goes the other way. And so it's hard to counter trend trade it as well if the market just dies on you and there's no trade, no follow through. So what we have left is the core 5 strategies, and I'm going to hit the calculate now button. Let's see, formulas, calculate now, and here is the core 5 strategies in the 25K portfolio. It's not exciting. It's only 5 strategies. You're left with Cobra 3, E-mini S&P, Gap continue to be E-mini S&P, which is in our book 7 trading systems for the S&P futures, released in 2010. Cobra 3 originally started in 2005, and the latest update, Cobra 3 was in 2009. Soybeans Day Trader 3 has been around. I can't even remember how many years I've had that. I have to go back and look. SR Counter Trend Gold, we've had that since 2012. And what else did we miss? We missed Cobra Euro. We've had that a long time as well. 2009, I believe. The Cobra's pattern started back in 2005. So yeah, we're left with 5 strategies. What are the results of those strategies? This is last updated on today, 11/17/2017. It's actually Saturday, but Friday was the 17th. No trading. And here is the results. Pretty boring results. Pretty mundane results. 2016 was similar. You see 10,000 profit. You see 2014 13,000 profit. 2012 12,000 in profit. These are not incredible amounts of profits, but these are strategies that have had for a very long time. And the main issue is that they don't trade so much. It's not that these strategies are taking a lot of losing trades, but they don't trade as much. And so you still eke out a profit if you just traded the core strategies. The bonus has really held us down. And you see the equity curve and you see the drawdown curve. And so the stability of the core strategies is still there because they don't trade as much. SR counter trend gold is our superstar strategy and responsible for a lot of the profits. It hasn't traded since October, very beginning of October, and so we would like it to trade. Anytime it's been on a winning streak, so the next time it trades, it could actually go through a losing streak. So that's part of the risk analysis. Soybeans Day Trader 3 hasn't traded much. Cobra Euro hasn't traded. It took one trade in October, I believe, one or two. Gap continued to be taken a few trades lately in the past month or two. Cobra 3 hasn't traded as much lately, and those have been losing trades. And so you see, overall, the core strategies are still good. They're low frequency. You hear high frequency these days, high frequency trading. I'm not a fan of high frequency trading. There's no way to trade frequently, in my opinion, as a retail trader. To trade all the time, you just churn your account to death. But this is the core strategies do show stability, and this is what I'm looking at. So this is the modification that you can make if you're trading the 25K portfolio, is you can roll back and trade the core 5 strategies, and then I anticipate that when volatility picks up, if it picks up, we can return to some of these levels like 2015, 2013, 2011, and so there's a lot of consistency here, and I like this portfolio. I'd like to see 100% returns, but it's challenging to get that in this type of market. Um, it's like I said, it's not necessarily a matter of strategies doing poorly. It's a matter of, so even SR counter trend gold, for example, one of our superstar strategies. I say that it's because it's one of my favorite. Has a good average trade profit. It's ending the day a lot of times without hitting the profit target. You see that a lot in our SR counter trend silver as well. It'll be profitable, but it has not, the market hasn't moved enough to hit what's a normal profit target. So this is a modification, so you can continue to trade the core, the 10 strategy version that you have, and wait for a bounce. There could be a bounce. It could turn and do well. We could get volatility starting next week, and we could get stability, and it could move potentially much higher. Or you could roll back and trade the core 5 strategies. The third option is to trade these additional 3 strategies that I will be sending to you as soon as I can, as fast as I can. SR counter trend crude oil 3, if you want to add that, it's a new strategy. We've had some profits this month in that because it trades in the $1 million portfolio. So if you add that strategy, you keep gap fill and reverse in. It's not a beautiful strategy, but it works. It's very counter trend, and so it's one of those strategies that I anticipate to do better in the future than the past if this counter trend nature picks up, and it actually reduces the drawdown. So if you just keep in gap fill and reverse E-mini S&P, the drawdown goes down. So let's watch out to hit the calculate button. So if you just add that one strategy to the core 5, you get this drawdown that goes down to 47.6250 because it works so much differently. You can take a strategy that has an ugly equity curve, and if it's very non-correlated, it can improve a portfolio. And so you see that it's actually down on the year because it takes this down. So you may not want to trade that for that reason. But it's a really cyclical equity drawdown curve. I like really cyclical drawdown curves. I like to see less gaps in here though. I like to hit run-ups more frequently. But this is a function of a lack of volatility more than anything right now for this setup. So if you remove this again, take a look at it again. I guess there's actually 4 options. You could just add gap fill in reverse E-mini S&P if you want. And here is the drawdown curve without it. So if you just add that, that could be the third option. The fourth option is to add this strategy And then you could add, let's see, what else was I going to add? I was going to add SR countertrend crude oil too, and then you could add soybean swing. This would be the only swing strategy to take advantage. You know, when volatility is low, sometimes you have to hold positions overnight to actually give you enough time to be profitable. So this is one of our top strategies. This actually tests well back to 1984. If you test it on the pit markets, one of the things you have to consider with this strategy, swing soybeans, is that it does hold positions overnight, and you could make or lose a lot on a gap overnight. And so what are the results if you add those three? We're looking at the results of the core 5 right now, and I'm going to update it. So you'll see the update to show the results. The drawdown does not go up much. It only goes up about $220 when you add those three strategies, and you get to 13,000, what would have been 13,000 on the year. And so in 2016 you see 13,000. Last November was huge, 81.97. So what it would have been huge is this is a new combination of strategies. So 2015 was nice, 2014 was nice. You see 13, 14, and 15, 30,000, 20,000, 30,000. So also a nice cyclical drawdown curve, and we're also in a drawdown. If you trade the core 5 strategies, you're not in a drawdown at all, and your risk to worst case drawdown is higher actually than if you trade this. It's about $3,800 if you take a look at just trading it from this point going forward. So I will be sending you these 3 strategies, and you can decide on your own to trade the original 10, looking for a bounce, trade the core 5, trade the core 5 with gap fill and reverse E-mini S&P, or trade the core 5 with gap fill and reverse E-mini S&P, SR countertrend crude oil, and swing soybeans conservative. And so there's a aggressive version and a conservative version, so you could trade the aggressive version because it's the same code. You just change one parameter to make it aggressive. So if you trade the aggressive version, that's something you could also do. Your drawdown goes up a little bit. Your net profit goes up this year by quite a bit. So that's been a good strategy to trade this year. And here is the drawdown curve. So if you need this, if you want this portfolio calculator tool, I can send that to you. You can play with it yourself. And you could test other options as well in this portfolio calculator, and email me and I can send this to you, and you will be getting the easy language or NinjaScript updated. I need to create the NinjaScript for this. This is a newer strategy, but I have it for the others, and you'll be getting that ASAP from me. Hang on. So in summary, I've updated again to show the core 5 with the new 3 additions. So in summary, the 25K portfolio that we will track going forward, and the official recommended 25K portfolio, will be this 8 system portfolio with the core 5 plus SR countertrend crude oil, gap fill and reverse E-mini S&P, which was currently in the 10 system setup, and then swing soybeans conservative. So you just need swing soybeans conservative and SR countertrend crude oil, easy language updates, and I'll be sending those to you so you can trade those 8 systems, the core 5 or the original 10, or any combination you want. Email this to me. Let me know if you have any questions. That is the update of the 25K, and I will be doing a $100K and $1 million update as well.